Hey folks, welcome to Market Correction Analysis by InTheMoneyStocks.com for August 13th, 2007. Let's first cover announcements. Today not much going on. Just wanted to congratulate everyone in the chat room today on a solid morning. We had a decent morning this morning. Also, some of you were in for the free trial today, and that was a nice thing to have some extra people in there just watching us to see how we run that chat room. Alright folks, I want to get right into the markets today because we got some interesting stuff. For the most part, the market was very lackluster today. Compared to what's been going on recently, last week, it was very, very quiet. In fact, we had no NASDAQ swings of 40 points in 10 minutes like we did last week. And if you guys remember, we had days where we gapped down 40 points, rallied to go positive in half an hour, then went down to new lows by the end of the day and took out those lows. Today was very lackluster. What you guys can see right here is, this is the NASDAQ chart. And what did we see today? Well, we saw what we had been expecting. And those of you guys that watched my weekend edition in the video, we talked about the Fed. And the Fed added another $2 billion in liquidity to this market again, picking up some of those subprime, the bad credit loans again, which is the same old, same old. You guys know how I feel. I think it's wrong. I think it's bailing out the people that made stupid errors, the companies that made stupid errors. But at the same time, let's face it, the technicals aren't going to lie here, folks. We are going lower. It's just a matter of when. The technicals tell us we are going lower. We're going to go back to March lows, and we see it. We've said in the video over the weekend, and this is key, guys, is that we said the Fed can, all it is a Band-Aid, all right? When you have an infected hand or whatever from a cut, yeah, you can put a Band-Aid on it. It might make you forget for a couple days, but guess what? When it gets bad enough, it's going to come back to haunt you, and you're going to have to go see the doctor. And that's exactly what's going on here, folks, all right? What did we see today? We saw a pretty steady decline, and I'm going to do a little trend tools right here on the technicals. But what do we see here, folks? We saw a push up at the open on the gap up, but look at this. This is the 200 moving average. We did not close above that moving average, and that's key. This is the moving average. We closed on it twice, or we closed on it here, opened on it, but then we fell. Fell down, and so forth, all right? We made one more attempt to get up there, guys, and we failed miserably. We didn't even touch the line. And then another sell. Alright, then we hit the 20 moving average. And you guys know how key moving averages are. You have to use moving averages as a trader, even a swing trader, I don't care. You have to use moving averages for buy entry prices, alright? You never buy up here, alright, because you know it's going to come down and touch that moving average. So wait, alright? Might as well get the best entry. Everything about trading is all about entry prices. Entry prices mean everything, and that's a great rule to go by, so remember that. We bounced up again, we came down again. Made a nice little candle right here. This is a buy signal on a candle, and exactly, what did we get? Intraday, we got to move up off this candle. I'll explain that if you guys come in the chat room, why that's a buy candle, and how you know it's going to be a buy candle right there when that candle closes. Alright, folks? But the key is here on the move down later in the day. We had another sell program, another buy candle which signals a quick move up, and another drop into the close. Alright, folks? And the key here in this ending candle, which I'm going to show you in the ES, is, let me bring up the ES chart, is look at this selling. You really see it better in the ES chart. And that's why I like when I use this during the day. This is really my market barometer. I don't trade the ES futures personally. My partner does. He loves trading the ES. I stick to day trading stocks personally. But the key is here. I love watching the ES because you see the move so much clearer. So much clearer. Alright, look at this sell-off into the close, guys. That's not healthy. When you see a sell-off this powerful into the close, and look at this volume. Volume is key too here, guys. When you see volume of this magnitude, look at how high these bars are compared to the rest of the day. This one candle was as high as that opening buy, actually a little higher. And you had two candles on either side pretty much just as high, just a little lower. So the key is you have selling volume coming in here at the close of the day. That does not make me think this is a healthy market. I don't care what the Fed does. I don't care about anything. I'm telling you, the technicals dictate that we will fall again. We will take out the lows. We made that double bottom on the chart, alright, guys? This is the weekly chart. Here's our double bottom. We take this low out right here, and I'll show you guys this on the daily. Let's go to the daily here. Alright, we're going to go to the daily here. We take out that low, which is right here on the daily chart, alright? And we're going to fall down to the March lows. Alright, the March lows are quite a bit further. Basically, we close below that low on the daily. Alright, we close below that line on the daily. You're going to see a 60 to 80 point drop on the S&P. Alright, that's what the technicals are telling us, and that's exactly what's going to happen, alright? What I also want to show you guys here in the daily, right? Here's the daily. This was last week, right? We had Thursday, right here, this big drop Friday, and then Monday right here, which was basically a non-existent day. Again, you know, overall compared to the volatility, today was nothing. But look at the volume again, guys. Red volume, very high. Today was light volume. That's the only thing. We're missing the candle right here, but volume was probably a lot lighter today, based as they held the market steady. What they need to do, and you guys have to understand this from my point of view here, I'm a huge contrarian player. You guys know that. And they have to bring everyone back in this market on the long side, or at least get enough people on the long side where when they push it down, they're going to make money. Because right now, there's really, and especially the last few days, there have been too many shorts. And having the Fed come in here has given the market a little confidence that the Fed's going to bail the situation out and everything is going to be okay. Now, in the long run, yeah, we're going to get through this. It's not going to be a big deal. I mean, we're going to look back at this in like 10 years and say, yeah, it was bad, but it wasn't, you know, it wasn't catastrophic. You know, well, a lot of people are going to get hurt, but it wasn't like a world-ending event here. However, in the near term, guys, this is going to hurt. This fall is going to be rough. All right, you can already see the movement down here, how we just got up to the 20 moving average. The 20 moving average is dropping. As that drops, it's making a resistance point lower and lower for this market to bounce up to and touch. All right, and the 50 moving average is coming down as well. All right, again, we take out this low right here, and it's all hell will break loose to the March lows, which are about 60 to 80 point drop on the S&P. It will be ugly. Again, here's the NASDAQ chart, double bottom right here. Well, you can even look at it a little higher than that, but you guys get the point here. This is not a pretty picture. The fact that we sold off hard into the close makes me worry. I did think that we'd have at least a day or 2 or 3 days of flat to slightly up market here to get some more longs on the table. But as you can see, the selling that came in at the close was somewhat significant. I also want to show you this. You guys know how I believe in the market-leading stocks, and I did a hot sector report in May featuring Goldman Sachs, Merrill Lynch, JP Morgan as market-leading stocks, especially Goldman. And I said to you guys in the report, and you guys can find this on YouTube or on the website under Hot Sector Report, that when this stock moved up huge, the markets led huge up. All right, we all went up big. However, when the market dropped, you know, the Goldman's leading the market down. And no one believed me because Goldman started to drop and the market was staying near its highs. And now all of a sudden we look at Goldman, and here's Goldman's daily chart, and look at this fall. 20% downside in Goldman, guys. 20% downside from the short. All right, the short in the Hot Sector Report was called up here. All right, actually even farther back, but basically at $230. We're now trading at $177.50. All right, and this is not done. Look at this same double bottom on Goldman. When Goldman breaks, the market will break, and it'll go. One thing I want to point out here, guys, is these financial stocks which led us up in the market, they're now reversed, and they've reversed at least 20%. Don't think the market's not going to drop at least that much, all right? We are looking at a 10 to 20% correction here, I think. We've only done 6, 7%, 8% on the Dow. All right, that's minute compared to a correction. You got to at least do 10% to think of it as a correction. And I'm telling you guys, this credit issue is not going to go away. Foreign markets are scared because we buy goods from all over. And when the housing drops and the credit issues come in, that's a big deal. All right? All right, again, look at Goldman sell off into the close. Look at Goldman all day. This is not a pretty chart. By the way, this is a sell signal candle. Those of you guys that know sell signals, this was a short right here. At the close of this candle, when this candle was broken to the downside, at this point, the lower the candle gets taken out. It's a short. You get this move minimum, and if you held all day, you got basically an 8 to 10 point move on Goldman on the downside as a short. Phenomenal short. Also look at the volume on Goldman at the last candle of the day. Look at the size of that candle compared to all this the rest of the day. Alright, that's my point, guys. You've got to be focusing on volume, market direction, and chart patterns, candlestick patterns. All this comes into play. So I really want to stress to you guys need to join this chat room we got going on. We do a lot of teaching. It's not just for day traders. It's for swing traders who want to learn the market. When the market's slow, we go into teaching. Today we talked about stops and limits and how to know when to get out and market maker tricks. All right, there are market maker tricks that will take your money as fast as you can put it out there. All right, and the point of the chat room is to get everyone by this. All right, I don't want anyone that's in my chat room to ever get fooled again on some of these plays. All right. So anyways, join the chat room. This market looks like it's going to drop more. We might have a little bit of a push up here based on the Fed still. I still feel like we need a little more of a push up, just a tiny one, before we roll out and take out that double bottom. Once that's taken out, we're going down hard, and panic will come in at the bottom, where we will bounce at marked lows again. Then we'll have to reevaluate and decide if we're going higher. All right, folks. The other thing I want to say is we are in the process of issuing new swing trade alerts. Those of you that have signed up for it, congratulations. You're going to make some good. We think you're going to make some good money. We like our picks a lot. They've done very well over the past, and I strongly encourage everyone to join on the swing trade alerts on inthemoneystocks.com. Join the chat room. We have great products on the website. Go read the daily market report every day. We talk about the direction of gold, oil, US dollar, and 10-year yields, and what's the market done today. It's a great report. You can't go wrong there. We've basically called every major move in every commodity on that report for free. Enjoy, guys. We'll talk to you tomorrow. Email me at gareth@inthemoneystocks.com, Gareth@inthemoneystocks.com with questions. Take care.